Is Ethereum a safer cryptocurrency investment? Since the crypto age began a little more than a decade ago, Bitcoin has become the dominant commodity in the space, attracting the lion's share of venture capital as its value soared above $1 trillion following a recent peak of $65,000. Since then, the crypto market has seen a severe correction, with Bitcoin losing more than half its value as it fell to a low of $30,000 a few days ago and then nearly retested those lows during a weekend sell-off. Although the asset class's uncertainty persists, some investors are looking beyond Bitcoin to make long-term bets on other assets in the space that they believe are more promising. According to Goldman Sachs, Ethereum is a superior asset to Bitcoin. According to a leaked Goldman Sachs research paper, Ethereum could be a much safer long-term crypto bet going forwards. Ethereum is the second most common cryptocurrency in the space, and it is fundamentally different from Bitcoin in a number of ways. If Bitcoin is a digital asset with intrinsic value, Ethereum is a network that enables the execution of smart contracts. In a nutshell, Bitcoin is dumb money, while Ethereum is a fully functional infrastructure network that enables the execution of a wide variety of economic tasks in a digitally distributed manner. Ethereum can serve as the basis for decentralized finance. The Ethereum network already powers a slew of cryptocurrency applications, including a variety of lending platforms, token-based trading exchanges, and an entire ecosystem of non-fungible tokens, NFTs, that allow creators such as artists and musicians to monetize their work. Due to the fact that Ethereum is a transactional network, it also collects fees for each transaction it processes, dubbed gas fees. Due to the fact that Ethereum produces revenue for its miners for each transaction that occurs on its network, investors will evaluate it using more conventional valuation criteria, similar to how they might evaluate a centralized payment network such as Visa or MasterCard. As a result of this dynamic, Ethereum is a revenue-generating economic asset whose value should increase as its network expands, rather than a purely digital token of value. In the near future, Ethereum can provide an additional store of value in comparison to Bitcoin. Both tokens are currently based on the proof-of-work protocol, which is extremely energy-intensive due to the fact that it requires each miner on the network to validate each complex cryptographic transaction. Bitcoin mining, for example, consumes as much electricity as the Netherlands and has come under fire for potentially contributing to climate change issues. While proponents of Bitcoin dispute the energy claim as simplistic and misleading, noting that a significant portion of Bitcoin's energy consumption is now derived from renewable sources, the greater issue is that such a protocol generates substantial congestion on network nodes by requiring each miner to verify every transaction, thus slowing the overall method. Another protocol called proof-of-stake circumvents many of these issues by allowing miners to verify transactions in proportion to their network ownership stake. Thus, A miner who owns 3% of the network's total tokens will be responsible for validating only 3% of transactions. This results in a much more lightweight, nimble solution, and also addresses the tragedy of the commons problem inherent in the proof-of-work model, where a miner controlling 51% of the network can sabotage the mechanism by refusing validation from any node but its own. Under the proof-of-stake scheme, such a bad faith move would be the most detrimental to the majority owner, as it would jeopardize the network's reputation. Vitalik Buterin, the founder of Ethereum, has announced that he intends to switch the Ethereum protocol from proof-of-work to proof-of-stake by the end of this year, thus increasing the asset's attractiveness as a forum for decentralized finance. Long Ethereum/short Bitcoin may be a less risky way to play the cryptocurrency market. Investors have clearly reacted to the Ethereum narrative, with the asset increasing 1,000% in value over the last year, compared to Bitcoin's 300% gain. Ethereum, despite its meteoric rise, is not without instability. Its weekend collapse below the $2,000 mark knocked it more than 50% off its recent highs. Trading the Ethereum/Bitcoin spread is one way to mitigate, but not eradicate, any of the uncertainty. The trade has performed exceptionally well over the last year, nearly quadrupling in value. Although the spread has reversed slightly in recent weeks, it remains in a strong uptrend, and if Goldman's analysis is right, Ethereum's infrastructure story would be much more important than Bitcoin's simple digital store of value. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.